Happy Monday to you, Oliver. A little bit of a higher trend here. If you compare that to what happened on the overnight trade, it was a little bit weaker. Where's the optimism coming from?
Well, I think we're just getting a little bit more volume coming into the market. We saw a lot of optimism going into the weekend. We saw that kind of dissipate the overnight session, which I think was to be expected. It was kind of one of those deals where you get these high expectations going into the weekend with two major wild card events, one being the weather, two being the trade deal. Weather basically played out as expected, so we're not really seeing a whole lot of follow-through premium on that end. And as far as the trade deal goes, it doesn't seem like there's a whole lot of substance behind that just yet. So you're seeing the markets kind of flounder around a little bit here, and I think it's going to be very important weather going forward, but also to see if we are going to continue these trade talks. There's been a lot of optimism around it, but still nothing pen to paper yet. So a lot of the technicals coming into play this week. We're right around that psychologically significant $4 handle for new crop corn. Also the 200-day moving average just above that at 402. This is going to be a significant pivot pocket for us. If we can see the market achieve consecutive closes out above here, wouldn't be surprised to see additional short covering from the funds take us a little bit closer towards 412 to 417. This represents a 50% retracement, or basically the middle of the range from the contract highs to contract lows. So if we continue to get a little bit of good news with a positive closeout above resistance, I think there's more room for to run in this market. You
were talking about resistance and psychological levels. Another one is that 950 level there in the soybeans, and what happens if we would get above that, or what it's going to take to break above that. We were showing pictures a little bit ago of standing soybeans, and they were about ankle deep in snow.
It looks very troublesome in some areas, but yeah, 950 obviously psychologically significant, and we saw the market stall out up here back in June. 948 was the high, so that's going to be a big pocket for us, 948 to 950. We know that the funds have kind of flipped the script here a little bit. They are net long futures, net long to the tune of about 6,000 contracts right now. If we continue to get suboptimal weather and start to make a little bit more progress and get a little bit more substance with trade, potentially we take out that resistance pocket and see the market accelerate higher, but really just kind of pending on those two major headlines, weather and trade.
You surprised about Kansas City wheat kind of leading the way higher here today?
You know, I'm surprised that Kansas City hasn't been leading the way over the past couple of weeks. 430 has been the level we're looking at. That's the breakdown point from the August 12th USDA report. So that's our target. We remain optimistic wheat, more so on the Kansas City side.